All right, we're back at it with another video, and I hope all of y'all had a Charlie Sheen Wednesday. Winning. Some of us won. I hope you guys won. I didn't do too bad today. We had the Federal Reserve report at 2 o'clock, letting everybody know that they will not be lowering the interest rates. And that news had a negative short-term impact on the day. It took us down to our lows, but the S&P finally recovered. But ultimately today, the S&P 500 ended in the red. Now these videos, it doesn't matter if it's a green day or a red day like today, I'm going to be making them every day that the markets are open. My plan is to help those of you who are trading to be a better trader, or to those of you who are not even in the markets to enter the markets. So with that, I'm just going to start selling now. And hopefully we're able to make a little bit of money with a few sells. We'll take a look at the S&P 500. Now if you look at these values up here in this bar, whenever I set on a candle, the values will change depending on which candle I'm on. And what the values mean is, this is the date, of course. This is what the candle opened at 9:30. This is the highest value for the day that candle reached in price. This is the lowest value in price. This is what the price closed at. The range is how much difference there was between the highest and lowest points for the day. And this is the y-axis. So you'll see that changes no matter where I go on the y-axis. And the volume of shares is self-explanatory, how many shares were traded that particular day. So on today's candle, you'll see that we opened at 635.92 and we closed at 634.46. So the S&P 500 went down roughly $1 on the SPY index here. Whether this is just a short-term downward trend for the day, or this turns into a long downward trend, that we'll find that out over the next several days and weeks. Institutions and hedge funds are really looking for an opportunity for price to drop drastically, because largely it's retail investors that have been in this run since the beginning of April, from the downturn in the stock market after the tariffs were introduced in April or announced in April. Large institutions and bankers and experts had predicted that the market would continue down, but we've been in a very aggressive bull run. This is I believe the third fastest recovery in the history of the S&P 500, or actually the fastest recovery in the history of the stock market. Now, I haven't had a lot of stocks to sell as the price has climbed, especially the previous 6 or 7 days. We haven't really had much to sell, but today, with price dropping yesterday and a continuation of price falling today, we have roughly 6 or 7 stocks that actually hit their sell triggers. So the first one we'll take a look at is Apple. All right, that's dropped pretty drastically. Unfortunately, at the current price of $209, that is below our purchase price of 3 shares at $211. So what we'll do is set a sell order for 2 shares. We currently have 4 shares, and I purchased these in blocks of 1, so we maxed out at 4. And when price drops below the fast moving line, I set a sell order, and when price falls below the slow moving line, we'll set another sell order. So we're going to set a sell order for 2 of our shares. Again, I bought these at $211.33, so we are going to set a sell order for $211. We're just going to set it 20 cents higher, just in case price spikes. So we'll come in here. We're going to sell. I'm going to sell 2 at $211.53. Good till cancel. Extended hours. Now we're going to confirm and send that. So now we have a sell order for 2 shares. The next stock is Coinbase. This has been falling for 1, 2, 3, 4, 5, 6, 7. This is the 8th day that it has fallen. It might be either people taking profits, or we may actually be witnessing a long-term structural change. And long-term could be a week or so. If it just lasts a day, maybe it'll turn around tomorrow, but we'll find out tomorrow. And we only own 2 shares, and that's because when price fell below this the fast moving line, I sold a share, and I will sell one share here because it fell. It's 4:45. I can't use the active trader, but I will be selling one share of Coinbase. Oh, we'll come in here and hit a sell order. We're going to sell one. The current price is $379.10. Now that one that I just sold is part of this group of 4 that I bought at $303. So we'll just call it a $75 profit on that one share. So the next one is RCL. Just type it in, that'll be a little faster. Now, typically when I have a stock like this, unlike Coinbase where it has been falling for 7 days straight, RCL had an initial price drop due to the earnings statement. Coinbase was falling for whatever reason, just a loss in momentum possibly. But this drop that happened due to earnings sometimes is just a very short term for a day or two. But yesterday their conference call wasn't all sunshine and roses. So you can see that the earnings estimate was $4.04. They beat it by 34 cents. They had an actual earnings of $4.38, which is great. But during the conference call, they said that they are booked for the next year and a half. However, what their plans are, they are going to start investing into smaller ships on rivers. They want to start investing in smaller, more intimate little rides along, say, the Mississippi or Ohio. They also want to invest into some smaller ships that will take shorter cruises off the coast. And as investors don't like it when companies plan to spend a lot of money, because if you're spending money, that's taking away from your immediate revenue stream and your profits. And as investors, we care about profits. So in the short term, we don't mind investing in the short term for companies to initiate, because sometime down the road, it'll all come back and there'll be even greater profits. But what I was about to explain before I got sidetracked, what I typically do on a stock like this, I might set a trail stop, which means that instead of selling immediately right now like I did with Coinbase, I'll place an order. So we'll come into Royal Caribbean. We're going to place a sell order, which is the same thing process, except for one particular action on this order ticket. So we're going to have one, and we're going to do, under a limit order, we're going to set a trail stop. And when we set a limit order through trail stop, we have to go with market, and that's going to be good till cancel. But now we have to set the price. At what fall in price do we want to allow the stock to go before it triggers an actual sell? So I currently have 2 shares that I bought in this block of 4 at $237. So we have roughly we'll just call it $90 profit at this point. So we're going to set a trail stop for $10. And it's good till it's canceled. But we can't use good till cancel right now because sell orders, trail stops are only good during the day. So this represents just for the day. Good till cancel is GTC. That means that it's active every single day for the next 3 months unless we turn it off or unless it sells prior to the next 3 months. So good till cancel is that this order will be there every day. EXT is extended hours, means a sell order would only apply during extended hours, but trail stops do not activate in extended hours. They are only activated between the hours of 9:30 and 4. So we're going to do good till cancel, and you can see the confirm and send button is active. So we're going to confirm and send that. So there's our trail stop sell order. The next is Verizon. So Verizon, we have 12 shares. We're fully booked on, or we're maxed out on all 12 shares that I like to have with Verizon. So I currently have 12 shares. So what we'll do is we're just going to cancel all of these orders that we had price action, the fast line cross above the slow line, and we might be in an upward trend. We have price earnings that were estimated at $1, we call it $1.18, but it was at $1.22. But if you look at this candle for the day, you'll see that price opened up at 42.67, and then it fell all the way down to 42.45, which isn't much for a move for Verizon. You can see some of these other candles. But what's important here is even though price dropped and came down to what possibly might be a resistance zone, it bounced back up. So it's possible tomorrow that price may continue up. So we're just going to cancel the orders now that price is above the slow moving average line. So we're going to take a look at XLF. XLF is an ETF for financials. Now we've been going down for 3 days as opposed to Verizon. We had an initial drop due to earnings, and now it looks like price has gone back up a little bit. But XLF, this ETF for financials, has been going down for 3 days on its own. So even though this candle is similar to the previous candle on Verizon, we're in a longer trend down. So I'm going to go ahead and sell. Let's see, I'm maxed out at, I like to be maxed out at 24, so 4 sets of 6. So I have a set of 6 that I bought at 53.38. So we're going to go ahead and place a sell order for 6. Sell 6. And we're going to sell that. Wait, let me, hold on. I just noticed that I actually have one that I bought for $52.88. So this sell order will be a little bit closer. So we're going to have XLF selling 6, and we're going to set that at 52.93. And that's a limit order, good till cancel. And there is XLF. Now we're going to XLI. So again, we have price continuation going down for 3 days. We also have a continuation of price. We had price fall below our fast average line yesterday, and then we have a continuation today. Previous candle, we reached a low and we went back up prior to close for the end of the day. But since we have 3 days in a row going down, with that particular reaction of candles, I typically sell. So we have 4 current, and I like to be maxed out at 4, so that was 4 sets of 1. And of those 4 shares, I purchased 2 at 146. So I'm just going to go ahead and sell one of those shares. And I don't know if that's the current price. Let me confirm to see if that is the current price in after hours. So we need to go to, so let's close this out. We're going to come here to our 1 day, 1 minute chart. Current price is 150.93 is the current price. So this is an after hours. The gray is after hours. The black is current is for the day, 4:30, 9:30 to 4. And then we have extended hours. So 150.93. We're going to come back to our 3 month, 1 day. And that is an accurate price of 150.93. And it sold. So our next stock is, and our next is UDOW, and that's also going to be our last stock. And that, the sale of the XLI, that was roughly a $5 profit. So we're going to look at UDOW, which is an index to the Dow Jones Industrial Average. I currently have 8 shares. And that would be 4 sets of 2. We have 3 days of price going down. We have a continuation of price after it fell below the fast moving line, so fast moving average. So we are going to possibly set a sell order. Let me take a look and see what the price difference is. And that price difference, we last bought at 89.61, which is here. So you can see we bought 2 at 99, but the price is already lower than that. So we have to move back to this block purchases. So because we have a continuation of price moving down after it crossed the fast moving average on this particular day, we're going to go ahead and sell 2 shares. There's 2. We're going to assume that is accurate. And there we go. We sold that. That is the last stock to sell. And that is at, we'll just call it a $10 profit on those 2. So that's $20. And I just remembered that is not the last one. We have one stock that's going to earnings tomorrow morning. And we'll go to Howmet, HWM. Howmet is a stock, as you can see, by all of these actions. This is a stock that I've been day trading since beginning of April. And this is a pretty good representation that shows that as price is rising, that's when I do the bulk of my day trading. I catch the price action as price falls during the day and then goes back up. You can see it opened here at 151 and then it fell to 153. So I would have done similar actions. I wait until price falls, I buy, and then during the day when it goes up and when it looks like it's about to fall again, that's when I sell. So that is what I do when I'm day trading. But we have earnings tomorrow, and that's what we're focused on right now. Even though price is going up and I own 9 shares, we're going to sell 3 just in case we have a bad earnings report and price falls. So we're looking for HWM, and we're going to sell 3 stocks. So the last block of 3 that I bought was around 189 that I didn't sell for a profit. So we're going to sell 3 of those. Again, 3. Until cancel and confirm. And hopefully that goes, and it did. So that was the last stock that we had to look at to sell. All right, it is time to buy. But before we do, if you could please hit that like, share, and subscribe button, I'd appreciate that greatly. All right, look at that. We made a little bit of money. We're going to buy some stocks, but before I do, there's an error in the video, and it picks right up with our very first purchase of SMH. So I currently have 6 shares. I like to have 8 when I have all 4 purchases. So we are definitely going to be buying SMH. We're going to buy 2 at $297.36. And there we go. So even though this purchase of 2 shares is at the end of April 30th, so we have to May, June, July 30th, we're looking at a 3-month run. This, since it's an index to the basically NVIDIA, this is going to continue for probably at least 2 years according to the experts, and maybe even longer. The amount of AI that people expect to be using in the next years is huge. So I had no problem purchasing that. We had price cross the fast moving average 2 days ago, and then we had price dropping yesterday, which is why I did not purchase yesterday, but I purchased the 2 shares a day because of this continuation. So now we're going to look at Visa. All right, Visa, we have price crossed several days ago, both lines. Then we had the fast moving average is a trigger when that crosses the slow moving average, and that's what triggered our price 2 days ago, but unfortunately we had price fall, and we had price fall again today. So, oh, we also had earnings. So if you'll notice, they had $2, we'll call it 84 cent estimated, but their actual was $2.98, which is good. But I did not listen to the conference call. I've only listened to a few conference calls. They're pretty technical. It's above my pay grade right now. I don't have enough experience. Right now, I'm just basically learning and instituting a system for my day trading practices. And I'm also making videos now, and that takes a great deal of time. So listening to conference calls, maybe in a year, 2, 3, I'll be able to do all of this efficiently, and I'll be able to listen to some conference calls and make the decisions, investing decisions or day trading decisions based on the conference call. But right now, I'm making my decisions based on rules, and the rule says if we have price falling, I don't buy. And our last one is another ETF. And this is for energy, XLE. And even though price, like, which one was it? That was Occidental Petroleum. Even though our price is below, on the 1 month chart, below the slow moving average, I will probably buy this stock because it's connected to the energy sector. And pretty much all energy stocks are going to be going up because our grid doesn't supply enough electricity for the AI demand. So let's see how much I need. And when I'm maxed out, I currently have 8, and I like to have 8, so I'm already maxed out. So there is no purchase to be done. I rarely add or exceed the rule that I set in place for the volume of shares that I purchase for each individual stock. I rarely exceed that, even as price is moving up. A lot of investors, or especially people who are traders more so than just investors, they'll continually add to a stock as price is moving up, and that's a great strategy for them. For me, what I do when we have a stock that's steadily going up, those are the stocks that I choose to day trade. So if we look at Meta, for example, we go back to Meta, you'll see as price is moving up, I'm day trading in and out depending on the price action. So you can see that I'm selling high and I'm buying low and selling high, buying low and selling high, where somebody else, they may have maxed out their initial purchase, and then there might have been a climb in price, and then they decide to add to that, and then there's another climb and they decide to add to that, and then there's another climb and they decide to add to that. But it's possible that they may have added right here at 747, and that's when price turned down. That happens to me as well, but for me at this point, I think this is a safer bet for me. I've still got a lot to learn in trading. Even though I am even though I am profitable, I have a great deal to learn in reference to becoming a better trader. Now that I think about it, we'll go back to XLE. There were some stocks yesterday that did make our list and did hit some purchase triggers. But let's go ahead and look at yesterday's list to see if any of those can be purchased today. So Verizon was one. The ETF SMH was one. Berkby was another one that hit the list yesterday. So MasterCard is one that we passed on yesterday. Let's see if price action changed. Nope. So we had price action cross, the fast moving average crossed the slow moving average, which triggered an alert to take a look at. And then on that, we had price moving down. So we did not purchase yesterday, and we have price moving down again. So we're going to pass on MasterCard. And the only other one that we passed on yesterday was Lowe's. And Lowe's was dependent on what the Fed Chair Powell decided to do with interest rates today. Now, if he had decided to cut interest rates today or in September, we would more than likely be in a green candle. But since they are not lowering rates, which does not benefit people who are looking to borrow money, whether for homes or cars or businesses for their expansion plans, price went down, and it'll probably continue down. Lowe's will not benefit from the economy until we actually have an interest rate change downward. So that's it for today's activities. I will pull up images of the results of today's actions. All right, there we go. All right, so our realized earnings for today is $289. We'll call that $290 for today, July 30th. And we had a little drop in our portfolio performance due to today's S&P falling. So we are currently sitting at 15.89% total gains, whereas compared to the S&P 500 year to date from January 21st, the S&P 500 is sitting at 9.12%. So I'm making money. I hope you choose to follow me, and if you do, it's possible that with some of these trades that I'm making, if you make the same trades, you might be making money together with me, and we'll both increase our financial freedom. And again, I have no problem showing you this because my whole goal is to get people into the markets so they can have a sense of security where they don't have to feel that they need to depend on Social Security. This is for a long-term plan. My style of investing is for long-term. It's not a get-rich-quick. I'm not making large bets. I make small investments into stable, long existing stocks, or basically stocks that are in the S&P 500. So if you do have any questions and you have any thoughts or ideas about your current trading practices or about getting into the markets, please drop me a question. Please reach out. I'd be more than happy to try to help. So with that, I don't think I have anything else. Actually, there is. I have the sell and buy list. So we've set a sell order for Apple. We sold coin. We set a trail stop for Royal Caribbean. We cleared out sell orders for Verizon. We set a sell order for the ETF for financials. We bought XLI ETF, and we sold XLI, we sold UDOW, and we sold Howmet, and we bought 2 shares of the SMH semiconductor ETF. Now I believe that we are done. Thank you for making it to the end of the video. Extemporaneous speaking is not my strong suit, but I look forward to improving over time. Thank you and have an awesome and amazing Wednesday.